Good morning. I'm just gonna wait for a couple more people to join because of right now there's only one person in here. This new template kind of covers up how many people are in here. Oh well, what are you gonna do? And that just moves me. Oh well. Good morning. Welcome to the most must-see live on all of finance TikTok. My name is Kenneth and I'm here to answer all of your stock trading, investing, ETF, dividend, anything stock market related questions. Rick Gilbert. Hello. Let's see here. Markets are closed, by the way, tomorrow. Good morning from Georgia. I'm in Georgia. Hello. Where in Georgia? We are in Greensboro. Temporarily. We're dog sitting. Can you look into VYM? Yes, actually, I just posted a video on VYM a couple days ago, actually. You might be able to find it. It's on my page. It should just be a couple videos back, actually. Let me go and see where I can find it. It's just a few videos back. Barnesville. I have no idea where that is. We are only here dog sitting. If you go on my homepage here on TikTok, let me see here. It's probably like a week or two old at this point, but everything is still there. It's VYM versus SCHD. But all the information you need for VYM is in that video as well. What was the confusion? Were you confused about the video? Because I can explain. I mean, VYM is a great dividend ETF, but it's no SCHD in my opinion. You look at something, this is for Rick Gilbert. How do you know if a stock is under or overvalued? Usually you use the price to earnings ratio, which compares the price of the stock to the earnings of the company per share. And it will give you a number like, let's see here. NVIDIA's price to earnings ratio is 58. So that means that NVIDIA stock is 58 times their most recent earnings. Usually you want the price to earnings number to be lower than higher. The higher the number is, the more overvalued the stock is, which doesn't guarantee that it could come back down or lose value. But it is one thing that makes you kind of consider like, oh man, the stock has had quite the run, like NVIDIA up 230% in the last year. You would look at the price to earnings ratio and say, is this stock overvalued not only for themselves, but compared to the industry average? So on a website like Seeking Alpha, you can see something, there's a valuation tab, and it'll show you the price to earnings for NVIDIA is 58, and the sector average is 25. So NVIDIA is very overvalued compared to the sector. However, most investors don't care. They look at that and they say, no big deal, this company is going to be even more valuable in a decade, so I'm willing to overbuy or overpay. It's like they know it's too expensive, but they just don't care. It's like real estate. Someone comes in and they go, this is a $3 million house. I don't care. I know it's going to be a $4 million house in a couple of years. So they buy it. It's the same for NVIDIA. They know it's overpriced and overvalued, but they believe so much in what the company is doing long-term that they don't care. And they're willing to pay a little more. We saw this with Tesla, where it was their price to earnings was like 100, 200 times earnings. It was vastly overvalued. Didn't matter. The opposite is undervalued. And you would look for a company that was under the sector median. Doesn't guarantee. A lot of people think, oh, if I can find stocks that are under the sector median for the price to earnings ratio, that I found something undervalued, and therefore it must be a diamond in the rough or something that's a hidden gem that no one sees and it's going to go up. It doesn't guarantee that it's going to go up, just like it doesn't guarantee that it's going to go down if it's really high and overvalued. It's just one thing you look at. What do you think about using a short straddle on NVIDIA before earnings? I'm not the guy to ask. I don't trade options. What are you trading nowadays? At the moment, nothing. I'm full-time content creator on TikTok. Ruth, Kenneth, do you recommend Vanguard or Fidelity? I've used neither, so I can't recommend either. But I know I have a lot of friends who use Fidelity and they like that. Devon is in here. He just picked up some SoFi right on. I also have some SoFi stock, and I love it. And if you see this, JOO2J, he's a friend. He's a must follow. If you want to learn anything about crypto, go follow him. He'll leave a comment if he's still in here. So you can go follow him. If you have any crypto questions, he's the guy to ask. Should I change target date fund to index? My target fund is only earning 2 to 3%. I think some people like a target date fund because it does everything for them. They don't have to keep tabs on their investment. The investment will auto correct as they get closer to retirement to move away from riskier and into more individual stocks. I guess it depends on what the fund is investing in. Some will show you. Usually they are, let me see, target ETF, target date. So it'll break it down by year. So 2040, 2035, 2055. So let's just do 2055 is when you want to retire in this scenario. This particular fund is investing in the Russell 1000, and then like emerging markets, developing markets, the Russell 2000. So it's giving you like broad sector stuff. You might find that the performance is too low. You might find that you want to handle your own investments. That's what I do. I handle my own. And that way you can kind of pick and choose what's best for you and your risk tolerance. That is for Jenny. Okay, let's scroll to the bottom now. There he is. In a trade, what is a good time to get out of it if you're down? So personally, I use anywhere from 3 to 7%. This is for trades only, not investments. Trades only. Investments, who cares? They will fluctuate like crazy. They will go up 20%. They will go down 20%. It doesn't matter if you've researched the stock and you're planning on holding it for the long term. It really doesn't matter if it goes down a little bit unless something has fundamentally changed with the company and you want out. For a stock trade, I typically personally trade penny stocks. That's anything under $5. They can be wildly high risk and they can have dramatic swings up and down. You might see something that's up 80% one day and then down 90% the next. So I'm in, I'm out. If it starts to work against me, I cut my losses anywhere from 3 to 7% depending on how much money I have invested. I look at the charts, I make a best guess of what I think might happen based on the volume, relative strength, Bollinger Bands, stuff like that. Let's see, other than dividends, this is from Rick Gilbert. Let me open the, oops, these pop-ups. Okay, markets. Okay. So on the earnings front this week, we have NVIDIA on Wednesday after markets close, and that's going to be must watch. But on Monday, there's nothing. I think the markets are closed on Monday. On Tuesday, there's Walmart, Home Depot, Barclays. After the markets close, Palo Alto, SolarEdge, and Realty Income. That's going to be a big one. Kind of all eyes on that one. On Wednesday, in the morning, Wingstop, Wix, like the website design. And then on Wednesday, after the market closes, a couple that I'm going to be really paying attention to are Lucid, Etsy, Rivian, NVIDIA in that order, or NVIDIA. On Thursday, Moderna and Nikola, the electric, and Fiverr, Wayfair, Block, like the e-payments, Carvana, NU, the Brazilian online bank. It's like their version of a SoFi, I guess. Booking Holdings, and then on Friday, it looks like Warner Brothers is the only one of interest to me. So that's what's going to move the markets this week. I think NVIDIA is going to be big. I think Walmart, Home Depot, Rivian are going to be must-watch earning reports. On the economic front, let's see, Thursday, not a lot scheduled from, it's just like this person is speaking, that person is speaking. Oh, U.S. leading economic indicators are on Tuesday, so that should be kind of interesting. Will Cody finish the story? I hope not. NVIDIA split? Yes, I think NVIDIA will probably split at some point in the next year or 2 or 3. At some point, I think they will split. It's just expensive. And I just posted a video the other day, and I have a playlist on stock splits. So for people who say, like, are they good, are they bad? You can go and you can watch the Stock Splits Explained playlist, which kind of goes over all the risks and pros and cons of splits, of which there are some. I have 2 Schwab brokerage accounts for each of my sons. What would you recommend I fund them with? This is for SS. Go watch the video that is pinned on my homepage that says new to investing, do this. And also watch the investing by age playlist. I have a couple videos on custodial accounts and what to consider putting into them, because as you can see at the very top of the page, it says for educational, informational purposes only, not financial advice. Go watch those videos. It'll give you some ideas on what to put into those accounts. My favorites would be an S&P 500, a dividend fund, a tech-based growth stock fund like QQQM or VGT or XLK. And then I would put in something like a real estate investment trust like Realty Income, who happens to be reporting earnings on Tuesday. But for Ruth, who's asking about the two, I can't tell you. I've never used Vanguard or Fidelity, but I know people like Fidelity. Will Cody finish the story? No. VOO and SCHB is so good. What I'm also looking at is a different market to SPYI. I look at QYI and there are no dividends. QYI. I'm not familiar with that one. I don't see QYI. I know there's one called QQQI. QQQI is like the NASDAQ 100 covered call ETF. It shows no dividends because it only just went public like a week ago. So you need to give it time. And usually when a covered call ETF goes public, I'm very weary, especially in the first 3 to 4 months. So usually I sit back and I say, let's see how this thing does first. And let's see what this fund is really all about. Let's see, their expense ratio is pretty high. It's 0.68. They haven't listed a dividend yet because they haven't really started selling covered calls yet. So I think you just wait and see. How about sports enterprises such as Manu, EDR, Batra, and MSGS? I'm not a sports person, so I never pay attention to the sports investments except for DraftKings, which I own. MSGS, the Madison Square Garden Sports Corporation, has a risk of performing badly. Their grades are terrible. It says that they're overpriced and have negative earnings per share. MSG is the only one that I'm familiar with. In a trade, we answered that one. Thoughts on COF? I don't know what that means. I don't see Capital One Financial. Have you ever borrowed against your portfolio? No. Where do you park your cash? I use SNOXX, a money fund. I park mine in a high yield savings account. Mine is through American Express, the website. They have a personal savings account where I think it's like 4 point something. American Express savings. Let's see if it shows me what it is. They're making me log in. This is how infrequently I log in. American Express high yield. It's 4.35. It's been pretty high over the last few years. Even before the Fed raised the rates, they were at 2, 3, 4%. So that's just always been my high yield savings. Marcus from Goldman Sachs is 4.5. There are others that are a little bit higher, but I'm not going to move my money for a little bit more. Great content, very educational. Thank you. Kind-hearted for QQQI. I think it's just a matter of wait and see. They only went public like a week ago. I'm upset that I didn't buy ARM when it was 50. ARM is now 128. Yeah, I'd be upset too. What's my net worth? I don't answer that on the internet. Is Supermicro for real? Yes, but I wouldn't be chasing anything here. This is just me. Personally, when I see a stock that's up 737% in a year, I just go, oh, well, I missed out on that one. The question you have to ask yourself is, if you had purchased it a year ago, would you be selling it now? Or would you be thinking it's going to go higher? If you think, I think it goes higher, and you have researched it extensively, you're not just sitting there going, I think it'll go higher because I want it to, because that's not a strategy. If your strategy is, I've researched this thing, I've looked at the analysts, I've read all their fundamentals, I've looked at their earnings, I really do think the stock has more room to grow, then even if you didn't buy it when it was 98, you could still buy it at 803. On the other hand, if you're looking at it going, if I had purchased it at 90 and it's now 800, of course I would have sold it. Then maybe you wouldn't buy it, because if you're thinking I'm selling it, then other people are as well. And as you can see, we talked about this in my live last week. People were saying, should I buy it now at 700? Should I buy it now at 750? It's 780. It's 800. It's, I think it got to like almost 1,000. It did get to 1,000, 1,004. And I said, I don't chase, because at a certain point, something is going to pull back, and you're going to be the bag holder. You're going to be the person who bought it at $1,004. And look at that. On Friday, it went down $200 or 20%. And now it's 803. So if you bought it at 1,004, you're sitting on a loss, and that sucks. How can I learn investment? You're at the right place. Just hit the follow and go through my playlists. Kind-hearted says, I'm personally not touching my Walmart until it splits and likely will go up. What's your take on Applied Materials? Let's take a look. The symbol is AMAT for anyone who's curious. And I'm going to go on a couple of websites here. So Applied Materials is $199 per share. In the last 12 months, it's up 73%. They are semiconductors, so in the same kind of field as like an NVDA, ARM, Intel, smart technology, whatever. I do not go live with people I don't know. Bye, sorry. That was a request. I got a request on my end to go live with someone. Their valuation is D minus because it's gone up so much in the last year. So now it's very overvalued. This is what like Rick Gilbert was asking about earlier. He said it's, what's overvalued? Doesn't actually look overvalued to me, but that's what it says. Growth is C plus, profitability is A plus, momentum is B plus. It has a couple hold ratings according to the analysts, but overwhelmingly more buys. So Applied Materials is currently $199. According to the analysts, who are only right about 30% of the time, it has a 1-year price target of $211 on average. That's about 6% from where it currently is. The highest price target is $250. The lowest is $160. There's 23 analysts covering Applied Materials. One gives it a sell order. So one guy is saying if you own it, sell it. 6 are saying if you already own it, just hold it. Don't buy more, don't sell it, just hold. 16 are saying go and buy it. So it gives it a moderate buy rating. Humberto, thank you for the follow. Don't stop believing. Thank you for the follow. Should I sell half my stock in NVIDIA preceding their earnings or hold? Only you can answer that. Let me ask you this. If NVIDIA's earnings come out on Wednesday after the close, if NVIDIA's earnings come out after the close and the stock skyrockets, it goes up 30%, are you going to be kicking yourself or are you going to be going, well, nobody ever went broke taking a profit, so I'm glad I took some money off the table. On the other hand, what if it tanks? What if it goes down 40%? Are you going to be kicking yourself? On the third hand, for me, I'm holding NVIDIA for the next 20 years. Like my plan is to hold it. So I bought it in the 120s. I think I bought more at 110. I'm not going to sell into their earnings. I'm going to listen to the earnings. If they come out and they say it's bad, our earnings were bad, we lost a lot of money, and it's basically over for us, and they give guidance for the next year and they say everything is slowing down, everything got overvalued, oh no, we're so sorry we did this terrible thing, then I might sell it. But if they say, hey, listen, we see the next 12 months as a little bit difficult, I'm not selling it. I bought it in the 110s. Why would I sell it at 700 or 600 or whatever it ends up happening to it? Why would I sell it and then wait to buy it back at a slightly lower price if I don't think it's going all the way back down to 100 where I first bought it? So, maybe it goes from 700 to 550. Oh, well, I'm still up. And if I believe long-term that the company will be fine, I use it as an opportunity to buy more. NVIDIA been blowing up, you're late. I don't know what that means. Walmart puts, that's totally up to you. If you want to bet against Walmart, their earnings are on Tuesday. Walmart, Walmart strikes me as a relatively calm stock. Like it doesn't move too much. We can see by looking at something called their beta. So the beta is a number that compares the stock's volatility to the overall market. There's probably a whole lot of math involved. How do you figure it out? I couldn't tell you. All I know is that if it has a 1 or above, it is volatile. And if it's under a 1, it's not very volatile. That's because Walmart has been around forever. They've got locations everywhere. They're not really a massive growth company anymore. They're just kind of there. Everyone goes. And so it's like Coca-Cola or McDonald's. It's not as volatile. It's not like Tesla, who's like, we're new and we're going to make billions and we're going to sell all these cars and we're going to do this and we're going to do that. Walmart's beta is 0.5. So it's not very volatile. If their earnings came out and were good or bad, I wouldn't expect the stock to move very much. It might go down 3 or 5%. It might go up 3 or 5%. But a put into earnings on a stock that isn't very volatile, I feel like it's something I wouldn't do, but it's your money. I don't give financial advice, so, maybe. What do you look for out of a stock that's going down? It's Altria. So Altria is down a little bit. I think it's down 20% this year or last year. It's down 15% in the last 12 months. I look at companies like Altria, like we were talking about with Walmart. They're there, they're everywhere, they've saturated the market. They're not probably going to do something that revolutionizes the industry that they're in, whether it's Walmart or, or tobacco. Altria is $40. They pay an almost 10% dividend. I look to see how much cash they have on hand. I look to see what their debt is. I look to see their dividend history. And I use a website like Seeking Alpha, which does all the calculations for me to look at their financials to let me know whether their dividend is actually safe or not. It's a lot of algorithm and like quantitative research that goes into this. So it's not just some guy sitting there going, yeah, I like this dividend, B minus. There's numbers and math and calculations based on their financials that tell you whether they think that the company has enough cash to maintain their dividend and enough future cash based on their guidance and their earnings and whatever. So yeah, it's down a little bit, but I don't really see them going anywhere. They've raised their dividend 54 years in a row. They continue to raise it every August. They have a dividend safety grade of B minus. If you want to use Seeking Alpha's more like in-depth stuff like the dividend safety grades, I did a partnership with them over 2 years ago. They gave me a promo code that's in the link tree in my website or on my in my link tree here on TikTok for $50 off if you wanted to try it. Is Bitcoin going to 60,000 by March? Couldn't tell you. Are you holding DraftKings long term? Yes. We are similar, but I avoid penny stocks probably because I'm older and more risk averse. Yeah, I don't invest in penny stocks. I just trade them. So I'll run a scanner. I'll look at a penny stock that I will then pull up on a chart, and I'll see that it goes down, it hits a support line, it goes up, it hits resistance, and it doesn't just do it once. As a stock trader, I want to see a continued pattern. So if I see it one time, I'll write it down on a piece of paper or I'll put it on my chart and I'll monitor it. If it hits resistance and then support and then resistance and then support 2 or 3 times in a row, I go, oh, this stock is hitting support and resistance. I can trade this. So when it drops, I buy it. When it hits the top, I sell it, and over and over and over until something changes. Thoughts on Alibaba? I like it. I don't own it. Alibaba has a lot of buy orders according to analysts. So it's $73 right now. The 1 year price target is 104. There are 20 analysts covering Alibaba. 0 recommend that you sell it. 3 recommend that you hold it. That means if you own it, you don't buy more, you don't sell what you have, you just hold it. 17 recommend you buy it. Is Dash a good place to start? Never heard of it. I always say, when people say like, I'm going to start on the easy phone app, I'm always like, don't do that, because at a certain point you're going to want more. And most of these phone trading apps don't really offer more. If you're a casual investor and you just want to buy an S&P 500 index fund every month, then sure, fine, go for it. But if you're going to, at a certain point, want to be able to do more research and more analysis and read the reviews and look at the charts and have a tech support, someone that you can call and talk to, not a financial advisor, but just tech support that you can do a chat with and say, hey, can you explain this thing I noticed on my account? What does it mean? I understand now, a friend of mine has told me that Robinhood has started doing this. They didn't used to, so I would imagine that the newer apps probably also don't have a chat aspect to their business. But just go with like Fidelity or Schwab or like something established. It doesn't cost you anything, like you're not paying more to go to that one and the free app is better. They're all free. I would just go with the established one right away. What's the catalyst for NVIDIA going up after earnings? Well, I think it'll be their guidance at the end of their earnings report. They can, they'll come out and they'll say, here's what we did last quarter, and oh my God, we made so much money. Great, but in the eyes of Wall Street, that's old news already. They come out, they say, here's what we made. Fine, but what are you going to do next? Wall Street is very much like a, what have you done for me lately? So I think that what we will end up seeing is we have to wait until the end of the earnings call when they issue guidance for the next year or quarter. Ruth, your comment was flagged for some reason, but I have unflagged it. I don't know why. Your comment says, let me just make sure. I don't really know. Can you explain the difference between a Roth and an independent brokerage? So a brokerage is just like Fidelity, Schwab, Robinhood. It's just a place where you can go to invest in stocks. And within those brokerages, you can pick the kind of account you want. So the kinds of accounts are custodial. So if you have kids, you would open a custodial account for them or something for college savings. If you wanted to plan for retirement, you would open a Roth IRA, or a traditional IRA, depending on your income. If you are fortunate enough to open a retirement account and you think you'll have extra money to also invest, you could then open an individual account. So I have a Roth IRA and an individual account. And in my individual account is anything that doesn't get to go into my, the Roth IRA, the max is 7,000 this year. So once I've invested all of that, I'm done in the IRA. I can't invest more. So if I want to invest more, I need to have a second account. That's why I have an individual account as well. And that's where most of my stuff is held. Also because for the last 13 years as a stock trader, I couldn't open a Roth IRA or any sort of retirement account because it was unearned income. So in the eyes of the IRS, they were like, oh, you don't have a job. You're not going to an office and getting a paycheck. You're trading stocks. That's unearned income. So I couldn't open a retirement account. Now, because I do brand deals on TikTok, I can. So I've taken advantage of that. But my account is always individual. So the brokerage is different. The brokerage has all of the accounts, and one of them is a Roth. NVIDIA is too pricey. Would you consider NVDX? NVDX is a daily short, daily long. No, I do not like leveraged ETFs. Just buy fractional shares. If you want exposure to NVIDIA and you don't want to spend $700 a share or whatever it is, just buy fractional shares, or just say you're not going to own it. Or if you own an ETF, it's likely already in that ETF and you likely already own it through the fund. Leveraged funds are extremely risky. This one is 2 times leveraged, which means that they're buying the stock, but they're also trading probably like very short-term options to double the gain, or in some cases triple the gain. The downside is if you can double a gain or triple a gain, you can also double a loss. So they're really meant for daily stock trades, not long-term investments, because you can compound your losses so dramatically. Also, their fees are insane. NVDX has a fee of 1.05. Anything over 1 is outrageous. Thoughts on Snowflake? I don't know too much about this company. Let's take a look at what the analysts have to say. Snowflake is currently 230. Year to date, the stock is up 15%. In the last 1 year, it's up 40%. In the last 5 years, it hasn't even been public that long. Since going public, it's basically at break even. So they went public at around 230, and it's currently 230. They're up 0.57%. However, their grades are fantastic. A plus for growth, B plus for profitability, A for momentum, A plus for revisions. The only bad grade they have is D for valuation. It is extremely overvalued. So if Rick Gilbert, if you're still in here, this is something you were asking about earlier about NVIDIA being overvalued. NVIDIA was in like the 50s for the sector, and this is the same sector. It's internet services, infrastructure, information technology. The sector average for Snowflake is 25 times earnings. Snowflake is 288. So it's extremely overvalued. I heard someone saying NVIDIA is going to have a stock split. No, I mean, I made a video earlier in the year saying here are some stocks that I think might split at some point soon, maybe this year, maybe down the road. And NVIDIA was one of them. But they have not guaranteed anything, and they haven't really announced a split. I'm not seeing. When is it? Oh, I already read that. Okay, I'm going to scroll down to the bottom. I think I got everybody. I'm going to scroll down to the bottom, and then I'll work my way back up. Is QILD a bad idea with CPI and the receipt of reports could affect it? I don't think QILD is bad as long as you know what you're getting into. It's a NASDAQ covered call ETF. They only sell covered calls. So JEPQ or JEPI, they do a hybrid approach where they buy some and they sell some. So they benefit from the markets going up, and they're also benefiting from the premiums that they're selling on their options. QILD does not do that. So if the markets skyrocket, QILD will not also skyrocket. However, their dividend premiums will increase because of the volatility, and you'll make more from the dividend. But the fund itself might lose value because QILD is constantly having to buy and then sell covered calls against the stocks that they've just purchased. If the stocks go up a lot, they'll get called away. Then they'll have to repurchase the shares. If the stock has gone down in that time, they're purchasing it maybe they're buying it and it goes down and they're having a loss. Maybe the shares don't get called away and the stocks drop in value. So there are risks involved. Is SMCI still good to enter? I've already talked about SMCI. I'll download this live and I'll be putting it on my YouTube channel later. I don't chase stocks that have ripped this much in such a short period, up 700% in a year. I just shrug and go, oh, well, I missed it. I'm not going to chase. Someone bought SMCI at $1,000 last week, and it's 800 today. So not for me. Let's see. Troy is asking about LUNR. LUNR. Never heard of it. Oh, Intuitive Machines. It's $7 a share. It's up 9% last week. Year to date, it's up 186%. So it was a penny stock. It was $2.56. Anything under $5 is a penny stock. Never heard of this company. It's aerospace and defense. Their grades are B plus for valuation, A for growth, D minus for profitability. That's concerning. A plus for momentum, A for revisions. I don't know about this company. I've never heard of it. It could be just a pump and dump that someone came on a group chat and hyped up on social media, and now all these people have driven in to buy it. It only has 29 million shares on the market, so it's something to me that some very wealthy group of traders probably could have all went in, purchased hundreds of thousands of shares, sent out an email saying, look at this unusual volume on this penny stock that was actually them. Then their private group got in, then they spread it out to the greater social media communities, and before you know it, the stock is on fire. They're going to sell their hundreds of thousands, if not millions of shares. It'll tank. That's my guess. I don't know. I've never heard of this company, but I'm always weary of what looks to be pump and dumps. DWAC, I would stay away from anything Trump related. Can you give an example of a portfolio to a new investor? Yes, I can. Check the pinned video on my homepage when you leave this live. It says new to investing, do this. It's not financial advice. It's just an example of what a portfolio would look like. You can also check on my investing for beginners playlist right here on TikTok, or you can check my investing by age playlist, which breaks down literally every single age from 3 years old to 18, 20, 30, 40, 50, and above. So go check that playlist. With UK and Japan in a recession, do you think one will hit the US this year? It's possible, but I don't think so. And I don't think, I do think we're going to kind of have that soft landing. After all, it's an election year, so they're going to do everything in their power to make sure that we avoid that, because you don't want to be the president during a recession or you'll lose. Do you think, do you outperform the likes of VGT and SMH? It depends. Probably not with my overall portfolio, but with some individual investments, yes. You can see here that Meta is my biggest gain at 1,900%. I purchased Meta or Facebook on day one. The very first day they went public, I went in and I bought, and I didn't care. I didn't think, a lockup is going to expire and the stock could go down short term. I didn't care. I was buying Facebook with the intention of, I'm going to hold this thing forever. And eventually, if you know me well enough, you know that I did sell some of my Facebook stock because I had to buy a home. I went to a bank. I said, hey, I want to get a mortgage for this home. They were like, what do you do? I said, I'm a stock trader. They laughed at me. And they said, you'll never get a mortgage. So I was like, all right, I guess I'm going to have to pay in cash. So that's when I sold some of my long-term investments. But I still own a lot of Facebook. I purchased it on IPO day, and then I bought more a month later when it cratered. Wall Street came out and they were like, this stock is terrible. Zuckerberg is an idiot. He has no idea, no vision, blah, blah, blah. And I was like, wrong. And I went and I bought as much more as I could back then. And I held it for a very long time. So up 1,900% on that. And if you look at something like VGT over the last 10 years, I think it's up 400%. VGT is up 460%, and I know that SMH is over 800%. But yes, with some of my individual stocks, I purchased Apple in 2003. In the last 10 years, I think it's up over 800%. WWE or TKO was up 950% in the last 10 years. Tesla, we all know, in the last 10 years is up a dramatic amount. I bought it in 2015. But in the last 10 years, it's up 1,300%. So yes, in some stocks. I wouldn't touch Tesla. BYD is coming for them. Warren Buffett is an investor. Thoughts on PDPB? Never heard of it. PDPB. Oh, PP. I got it. Sorry. PPB. PBPB. Potbelly. God, that's an annoying symbol. Potbelly, is this the sandwich restaurant? It is, I don't know. I'm weary of fast casual restaurants that aren't mega, like McDonald's, Chipotle, Taco Bell, like a Yum Brands. Potbelly, how big can they be? They might have a couple locations, but I don't know if they have like enough to make it like a worthwhile investment for me In the last 5 years, it's up 46%. In the last 10 years, it's down 37%. This might be a prime example of just because you like it doesn't mean it's a great investment. Usually I'm in the camp of if you like it, it's a good investment, but not always. You could like Snapchat and the stock has been a loser. You could like Etsy and it hasn't been a great stock. Potbelly is another one. If you bought it 10 years ago just because you love it, you'd be sitting on a 37% loss. To open a custodial account, do the kids need to have any source of income? It depends on the sort of account you open for them. If you wanted to open up a Roth IRA for your kid, they would need a job. If you wanted to open a custodial account for your kid, then no. But there are different types of accounts. There are education and custodial accounts. So if you were saving for college, you could get something. I'm looking right now on Schwab's website, a 529. Zero minimum. You can contribute to anyone, no matter what state you live in. It can be for your kid or a loved one, like a nephew or a neighbor. A brokerage account allows you to make a financial gift to a minor that will help teach them about investing. There are no contribution limits and no gift tax incurred for contributions up to $17,000 in a single year. So you as your parent could give $17,000 a year and not pay any gift tax for that sort of account. But it is not a Roth IRA. I believe that there's still going to be tax on that account. But there is something called a kiddie tax, which sounds creepy, but that's what they call it. So it might be limited in terms of taxes. What are your thoughts on KRTL? Never heard of it. KRTL. KRTL Holdings? No, come on. It's a penny, man. Is Tesla dying? And is NVDA going to crash? No, I don't think Tesla is dying. I think Tesla is just in that weird phase where I'm sure they knew this day was coming. Look, when they first started, they were the only electric vehicle company around, at least that I know of. At least maybe the only serious, viable electric vehicle company around. Nobody was doing what they were doing. They had the technology. They had the manufacturing. They were making these cars. And people just kind of looked at it and went, whatever. As they progressed and more people were like, hey, I want a plug-in car. I want an electric car. More brands started to be like, wait a minute. Could we make money on this too? So more and more companies started to do it. At a certain point, Tesla has to realize the competition is coming, and their unique position as like the only one is no longer unique. So they've got a lot of competition. Any company now has an electric vehicle or plug-in hybrids or whatever. So they're not dead. They're not done. It's just that their landscape is changing. My feeling is that Tesla won't be this massively volatile company that it used to be, where it could go up $300 after earnings and it could skyrocket and they could do splits and then it would go right back up and they could do another split and it would go right back up. I think they might be in their sort of like middle-aged life where it's not massive growth anymore. And I don't think NVIDIA is going to crash, but their earnings are coming out on Wednesday, and it would be all eyes on Wednesday for me. I will be watching Wednesday laser focused for NVIDIA. I've been watching its crazy rise, but it fell 20% in a day last week. This is from Ken the Man, and Ken the Man, I know right away that you're talking about SMCI without even having to say, I'm sorry, what stock are you talking about? It's the kind of thing where I look at it and I go, people go like, did you buy it? Did you buy it? No, at a certain point, I look at a company that's up 400% in a year and I go, even if it could go up a little bit higher, I'm not willing to risk it at 4%, 400%. And then it goes up 500%. And then it goes up 600%. And I'm watching it going, one day this thing is going to crumble, and I don't want it to crumble on me. So I'm just going to sit it out. Am I missing out on gains? Yeah. Does it bother me that much? No. How many shares could you get at $500? 2, 3, 10, you know what I mean? So for me, I do the math and I go, oh, if I had purchased 2 or 3 shares at 500 and it went to 1,000, okay, I would have doubled my money, but I'm not retiring off of it. So no big deal, that I've missed out. I'm not going to run to chase something because I missed out on $200, or $500 or $1,000. Usually what happens when you chase something that has a massive run like that is at some point you become a bag holder. You're the guy who bought all the way up at the top, and someone bought it last week at $1,000, $1,004, and now they're down $200. Meta says, difficult question, difficult to get a question, and I'm very sorry. I do say here, if you ask a question, wait, I will respond. There are 263 people in here right now, and every time I scroll to the bottom and work my way back up to the last comment that I had answered, or the first comment that I had answered, by the time I get there's 99 new messages. I see it on the bottom of my screen, 99 plus. I try to get to everyone. I know that people are irritated that they don't get their question answered. Do you need a copywriter? I don't think so. Thoughts on Rivian? I own it. I like it. I'm going to watch their earnings on Wednesday. Is SMCI still good to enter? I think we answered that already. DD says, when you make an investment, how much do you put in at a time? I'm a fan of lump sum investing. I like to compound as much as possible, as early as possible. So if I want 100 shares in a company, I'm just going to buy the 100 right now. That way I get to benefit the most, the earliest. So if they're paying a dividend, I can make the most I was planning on making. The only times that I don't lump sum is if I think that the economy is on shaky ground. Then my take is, look, I could still be wrong, so I'm going to buy half, or I'm going to buy a quarter. And that way, if I'm wrong and we don't have a recession, or the economy doesn't crumble or collapse, then I got some skin in the game, and I can feel at least okay that I got something. And if I'm right and the recession does happen, then I can just go in and buy. I can buy more at a lower price. Okay, thoughts on Amazon? I like it. I use it. What are the best resources to start learning? Is paper trading any good? I'm not 18 yet. Yes, paper trading is fantastic. Paper trade with what you're going to real trade with. So if you're planning on trading with $1,000, paper trade with 1,000. That way your gains and losses are realistic. Don't paper trade with $1 million if you're not going to trade with $1 million. Can I buy ETFs from a brokerage account? Yes, you can. What is your average return per year with your stocks? I don't know. I don't really track it. What do you think of Rivian with their earnings coming out on Wednesday? I like it. I'm eager and I'm a little nervous. Keep an eye on ARM Holdings. Yes. Bet on yourself. I just looked. It's now 57. I have a Charles Schwab account. What stock can I buy? This is for Annabelle. If you're still in here, you can invest in anything in a Charles Schwab account. What are the top stocks you're looking at that are undervalued? I don't have any. Can you give us an example of your portfolio for a new investor? Okay, I'm all caught up. I'm going to scroll to the bottom. What do you think about Eli Lilly and Novo? Eli Lilly has had massive gains. Actually, I had it when I was a kid. I didn't have it. My mom had it. And I remember at a point we were up like 90%. Ages ago, when I was a little kid, we were up like 90%. And my mom would sit down with me and show me when her quarterly statements would come in. And I was like, this thing is up 90%. And she was like, you're right, that's a pretty big gain. So we got on the phone and called her idiot financial advisor. And he was like, yeah, you should sell it here. Over the last 10 years, Eli Lilly is up 1,200%. So that guy, stupid idiot. How about Tex? I've never heard of it. And the other one was Novo. Is that Novo Nordisk? Novo Nordisk is currently $124 a share. It's up 78%. Their grades across the board are fantastic, except for valuation, which is rated at an F, which means it is a little bit overvalued. They do pay a dividend. It is very, very small. Well, it's not that small. It's 1.5%. It's not a lot, but let's see. Over the last 10 years, the stock has gone up. Let's see here. Over the last 10 years, it is up 452%. So pretty good. I'm typing it in here. It has a 1-year price target of 140. What about Disney? Dead cat bounce like last year? Maybe. I mean, Disney has had some turnaround. They've had a little bit of good news recently. I guess their earnings were pretty good, and the stock went up from like, what did it go up? From like 90 to 110, 111. It's up 23%. I don't know if there's going to be a dead cat bounce. If things turn around for the company, I guess we have to wait and see. Thoughts on Amazon? I like it. I own it. I think it's going to be around for a long time. I think Amazon's going to be just fine. They have their hands in a lot of pies. Their healthcare, their movies, their television, their entertainment, their pharmaceuticals. They have dropshipping, cloud. I mean, they do everything. What do you think of NVDA? We've already talked about it. I'm going to download this live and repost it on YouTube later today. Meta says it's okay. I understand you have mega folks in the group. No need to apologize. Just noting my comment. Yes, I feel the same way. It's hard. I try to answer as many questions as I can, but I know I'm not going to get to everybody. Are you taking some profits now? Some call it trimming with hopes of jumping back in later. This is from TD Ranch. Hello, I recognize you. No, I'm not trimming back on anything because I've purchased so long ago. I bought NVIDIA 2 years ago in like the 110s. So if I were to trim now in the anticipation that I think it could go down, I don't think it's going all the way back down to where I purchased it, which means that if I were to trim it now and rebuy it later, I'd still be paying a much higher price. I mean, what is it now? It's, let's just go through an example. I bought it at 110 and 125. It's 726 right now. So if their earnings come out on Wednesday and it's terrible and NVIDIA drops to $500 and they say, yes, we had a bad earnings, but we think it's going to do fine long term, then I would just buy more at 500. But if I were to sell it at 700 or 500 or 600 with the hope of buying it back later, I could sell it right now at 726 and say, well, I'm just going to roll the dice that I'm going to guess that earnings are going to be bad. And if I was right and the earnings were bad and it dropped to $500, I'd still be paying way more than what I first purchased it for. So no, I don't trim or cut back unless I have so many shares in a company that it makes sense for me to take some profits off the table, and that's not the case with NVIDIA. But if I had like 2,000 or 3,000 shares and I was up this massive amount, then yeah, I might say like, okay, I'm gonna sell 500 shares and take that money and divide it up into other kinds of investments or go on a vacation or something. But for me, no. NU Thoughts would appreciate it. Yes, NU is a Brazilian bank. We actually talked about them a minute ago because their earnings are coming out on Thursday after the market closes. It's a Warren Buffett company. I mean, it's not really a Warren Buffett company. He's invested in them is what I mean, which is unusual because he usually doesn't invest in stocks that are $10 and don't give dividends. He's a dividend guy. He's a long-term buy and hold guy. So the fact that he brought like a Brazilian online bank is kind of weird. I mean, it was obviously not his largest holding. He probably took it like a speculative investment and said, oh, I'll just buy a couple million shares because that's nothing to him. It's $10 a share right now. It has a 1 year price target of 9. That's an old price target because I think they've probably already hit it. Year to date, it's up 24%. So that $9 price target is just the price target they've surpassed already. Their next price target is $10 and it's 10.36. So they've smashed that one too. As a speculative investment, I put in what I was willing to lose, and I wouldn't think of it like a big, I wouldn't think of it I'm going to make it a large part of my portfolio. Big Al, you commented on one of my videos this morning, so I recognize your name. Hello. Disney is up 23% in a month. Isn't that wild? They had really good earnings. Chief Editing Officer, your comment was flagged for some reason. You said Coors coming out of bankruptcy looks to be going well. Your thoughts? I don't know why that comment was flagged. TikTok must have picked up something they did not like. I've never heard of this company. It's $3. It's a penny stock. It's up 900% in the last 12 months. It's up 150% in the last year. Typically, when I see a penny stock like this, I think it's being pumped and dumped. I would be very careful. It has 185 million shares on the market, but at 89 cents, a group of people could come in and buy up a large amount of shares and then sell it to their private Discord that they found a hidden gem and you should buy it. And then they pump it up and they sell it. I'd be very weary of something this cheap that has had that big of a run. I'd be cautious. I would treat it like a lottery ticket. What biotechs are the public watching? Biotech. So what I like to do when someone asks like, what are the hot stocks in a sector? I like to look at the biotech ETFs and I look at their top 10 holdings, and that gives me some clues and insights as to what the big money is buying. So I go on a website like Seeking Alpha, and I think maybe a lot of people don't know this, but on Seeking Alpha, their search bar isn't just for you to type in AAPL and look at Apple's chart. You can actually use it like a search tool. So we type in, you're interested in biotech. You said, oh, what are the biotech stocks? I go on Seeking Alpha, I type in biotech ETF, and a list pops up. XBI, BBH, PMCB. So let's just click on XBI first. It's a biotech. It's an S&P 500 biotech ETF. So it invests in all of the companies that are biotech on the S&P 500, I guess, which is 124. That seems like an awful lot. So maybe I've misunderstood something here. Or maybe it's just healthcare. Maybe that's how they're classifying it. They're classifying, okay, so they're classifying this as healthcare and health just broadly. But their top 10 holdings are Cytokinetics, which I've never heard of, Karuna Therapeutics, Biohaven Limited, Viking Therapeutics, Sarepta Therapeutics, Ardilic, I've never heard of, Recursion Pharmaceuticals, Iovance Biotherapeutics, and Vaxcyte Ordinary Shares. And the very last one of their top 10 is the only one I've heard of, is CRISPR Therapeutics. Is their it's their smallest holding in their top 10. Cytokinetics is their largest holding. It's $76 a share. So what I would do is I would go through it'll give you 3 or 4 when you type in biotech ETFs. Go through all their top 10 holdings. See where there's overlap. If all ETFs invest in their largest holding is Cytokinetics, then I would, as an investor, think I should look into this company and see why all the ETFs like it. Uber, I like Uber. I don't own Uber. I think their stock is highly rated from the analysts. I'm just going to pull it up. Yeah. Uber is $78 a share. Its 1-year price target is 80, which is $2 away. So it's 2.5% move. Their highest price target is 95. There are 37 analysts covering Uber. Of those 37, 0 give it a sell, 2 give it a hold, 35 recommend you buy it. Yo Mama says, I own 600 shares of SMCI. That is insane. Here's what I would do if I owned, I don't know when you bought it. Maybe you bought it last week. If you purchased it a long, long time ago and it's up 737%. Personally, I'm not telling you what to do with your money. I'm just sharing what I would do if I had 600 shares in a company that was up 737%. If I happened to be up 500, 600%, I'm not saying you bought it last week at 1,000, then you're screwed. But if you bought it a year ago, I might be selling some of my shares. I might be looking at it going, I'm going to sell half. I'm going to sell 250. I'm going to sell 100. Just to take some profits off the table and reinvest that money or reallocate it into something else. That's what I would do. BMR Imaging, never heard of it. I'm guessing it's a penny stock, but let's go take a look. Beamer Imaging is $13. It's not a penny stock, but it was. Year to date, it is up 835%. No, I would stay far away from that. That seems suspicious. Can you share your thoughts on long-term horizon for Amazon? I don't think Amazon is going to move much anymore. I don't think they're going to be a huge growth company anymore. I think Amazon has kind of peaked in terms of going into the thousands. It's currently 169. They have a 1-year price target of 208. It's a 22% move for the year. I think that's pretty reasonable for Amazon to go up 22% in a year. They have 40 analysts covering the stock. Of those 40 recommend you buy it. So across the board, 40 of the analysts, all 40 recommend you buy it. Big Al says, what's the CAVA theory? I assume you mean, why am I investing in CAVA? I think CAVA is going to be the next Chipotle. I don't think that they are going to be $2,000 or $3,000 a share like Chipotle. That's not what I'm saying. Although as a shareholder, I got my fingers crossed, but fingers crossed isn't a strategy. Chipotle is almost $2,600 a share right now, which is insane to me. CAVA is trying to be like that. They're a luxury brand. They're high quality ingredients. They're locally sourced. It's fast casual, but there's nothing fast food about it. If you've never been to a CAVA, I urge you to go. Everything is made, I think, in-house. They have lamb meatballs. They have grilled chicken. They have honey harissa chicken, which is excellent. They have every vegetable you can imagine. They have lentils. They have rice. They have these super greens that are like kale and Brussels sprouts that are shaved thin, and they have harissa and hummus and lemon and herb tahinis. It's not like McDonald's where it's like a Big Mac. I love CAVA. And they're expanding rapidly, and they have a plan to expand rapidly, but in reasonable time frame. They're not saying we're going to open 1,000 locations every year, because they know if they were too ambitious, quality would suffer, the people they would hire would suffer, everything would suffer. So they're looking at their expansion reasonably. I think their plan is 1,000 locations in the next 10 years, or something like that. That seems reasonable to me, and I like it. All right. I'm going to go down to the bottom. I think we're all caught up here. What's your exit rules for a position? For example, if it drops X, sell Y. This is for Wilvo. Hello, I recognize you. For stock trades, I'm strictly 3 to 7%, depending on my mood and how much I've invested and what the charts are telling me. For an investment, I usually don't base my sells on percentage, because we're in a very volatile time, and really high quality stocks can go down 20% and then they can go up 20%. So I'm not going to get out of a long-term investment just because of some short-term issue. For me, it's more news and financial based. So if they come out and they say, man, everything is changing for us, our debt is spiraling out of control, we're burning through all of our cash, we have mismanagement, I'm out. Do you think SoFi will be a long-term hold? Yes. Any thoughts on laser? No, I've never heard of it. Okay, I caught up. I'm going to go to the bottom. We've got 6 minutes left. Favorite stock trading books for education. This is for Shane. Click on the link in my bio. It's going to take you to a link tree. TikTok is weird. It's going to say it's flagged. It's an inappropriate link. I promise it's not. It's just a link tree. If you don't want to click on it through TikTok, you can go and follow me on Instagram. It's the exact same link, but Instagram does not come with a big scary warning. It'll take you to an Amazon. It'll take you to my link tree, and you can find an Amazon storefront where I have all the books I recommend. Any thoughts on Stockpile brokerage account for kids? I've never heard of Stockpile. Stockpile brokerage. Your favorite stocks by the dollar. Parents and kids grow together. Hey, I've never heard of this. Designed for families, hands-on learning, access to crypto, fractional shares. This sounds really cool. I've never heard of it, so I don't really have an opinion yet. I mean, you can go on Schwab or Fidelity and open a custodial account for your kid and basically probably do the exact same thing, but this might make it a little bit easier, and maybe it's more geared towards kids, which could be fun. Palantir, SoFi, Intel, I like all three. Although Intel, I'm kind of whatever on. CAVA for me is great. I'm up over 20%. Any thoughts on laser? No. The hummus is in ShopRite. Yes. CAVA sells their sauce. I'm getting so excited. CAVA sells a lot of their sauces, pre-bottled dressings in grocery stores. What do you think about Marathon Digital? By the way, CJ, you don't have to ask the same question 20 times. I'll scroll up periodically and find the old questions. So I got you. I don't have any thoughts on laser. Marathon Digital is really tied into crypto, so it's going to be very volatile. It's up 273% in the last year. It's $26 a share. It's extremely overvalued. But as a play in with crypto, maybe. My only concern is that now the hedge funds are basically buying up all the crypto, that it could be a little bit less volatile. Didn't you just say you don't like fast casual restaurants that aren't massive? Yes. I think comparing, though, a Potbelly, which has been around for a very, very long time, and they haven't really expanded in a huge way, they kind of look like they're coasting to me, whereas CAVA is, we're new, we're small, and we're expanding. So I view CAVA more as like a growth potential than something like Potbelly has been around since I was in high school. And I've seen like two in my life. So they probably don't have like a massive plan to expand. And when you're in like a fast casual sandwich place where Subway dominates, Jimmy John's dominates, what's the other one? It's not Jimmy John's. It's not. What's the other fast casual sub place that people like? Mikey. Damn it! What the hell is it called? Jersey Mike's. Got it. Those are the ones who dominate. So I think like a Potbelly. I mean, you have to look at it individually. So you're right. Fast casual that isn't huge, I usually stay away from unless I look at what they're talking about and they're saying we have a plan to expand rapidly. And they've only issued a small amount of shares, and it's very popular right now. They're growing. They're announcing more locations. Been in and out of CAVA, should have held it. Yeah, CAVA for me is a stock that I'm just going to hold forever. Look, if you sold it and you regret selling it, you can always buy it back. I think the good state of mind, or the good question to ask yourself is, if you hadn't sold it, would you still be holding it, or would you have sold it at this point? If you say, oh, I wish I had sold it at this point, then don't buy it back, right? Because you for whatever reason you think it's done. You would have taken your profits here. If you're saying, no, I would have bought it and I should have just held it the whole time because I think it goes higher from here, maybe you buy it back. Pan, what do you think? For whatever reason, your comment was flagged. I don't know why. It's a Canadian diamond company and it's 0.005. I don't know. Thoughts on AMD? I think it's going to do fine. I think they're in the space as NVIDIA. So NVIDIA's earnings are out on Wednesday. So I think it's going to be like a rising ship kind of thing. Like if NVIDIA's earnings do really, really well, I think all the semiconductor stocks, like AMD included, will do well. Hi, this is for Samuel Dayman. What would you invest now with your first 500 pounds or dollars? My first 500 would go into an S&P 500 index fund. It's the safest. It's got the largest track record to back it up. It goes up on average 10% every year. On average, that means some years it's going to go down. Other years it's going to go up. Over the long term, the average is around 10%. And I would just put it in there and reinvest the dividends and add to it slowly over time. As I became more interested in the markets and investing, I would then branch out into other ETFs. If you want, there's a pinned video on my page that says investing for beginners. Do this. CAVA is super underrated. I agree. Delicious CAVA. Yes, I agree. This seems kind of unreal. 2,300. Yes, I posted a video. This is for Kindhearted. I posted a video. It's probably a couple weeks old now. Someone asked me why McDonald's was more per share than Apple, even though Apple is the larger company. It really, at the end of the day, comes down to the amount of shares the company has put on the market. So you're saying it seems unbelievable that Chipotle is $2,300. It doesn't mean that Chipotle is a more valuable company than Apple. It just means per share they're more expensive. But if you look at the amount of shares they have, Chipotle has 27 million shares on the market. So what they did was very, very strategic. They said, we're only going to put a small amount of shares on the market. That is going to make for massive demand. Everyone's going to want it. Not everyone can afford it, just like their burritos. It is a luxury brand. It is a luxury stock. They like that a burrito is $15. They want it to be $15. They want the higher end consumer. And so they've released a very small amount of shares, unlike Apple, who has 15 billion shares on the market. Sound AI, I'm not familiar with it. Sound AI, SoundHound is $3 a share. It's up 4% last year. It's up 80% this year, which is insane. They have a profitability grade of F, but all their other grades are good. B- for valuation, A+ for growth, A+ for momentum, B for revisions. It has a strong buy rating according to Wall Street. It's $3 a share, $3.82. I would treat it like a lottery ticket. I'd only put in what I was willing to lose. Amazon, we've talked about. Palo Alto Networks, I talk about a lot, oddly enough. It's not a stock that ever comes across my radar, but it comes across a lot of you guys in the comments are often asking about Palo Alto. It is currently $366. It has a one-year price target of $387. 29 of the analysts who are of the 29 analysts who are covering it, 26 recommend you buy it. It has a one-year price target on the higher end of $450 and on the lower end $330, which I think was just a higher price target they've since surpassed. Marathon Digital, we've talked about a lot already. I'm going to be reposting this video on my YouTube channel later, so you can go back and watch it. Is CVS a good buy? I mean, they've branched out into healthcare and into things like that with their minute clinics or whatever. So I think that's a good stream of revenue for them. It's $77 a share right now. Their one-year price target is $88. They stopped selling cigarettes a couple years ago as a kind of like a signal that they were moving more into health, which is funny because they still sell like Doritos, you know. But the one-year price target is $88. It's a 15% move to the upside. Of the 18 analysts covering it, 4 recommend you hold it, 14 recommend you buy it. My parents make too much to do a Roth IRA, and I'm trying to get them to do a backdoor Roth, question mark. Yeah, go for it. They can also just open a traditional Roth IRA, or they can open, if they don't have a Roth IRA, they would have to open a traditional and then put in money into the traditional, and then not invest it, and then move it into like a backdoor Roth IRA. Depending on the brokerage you use, you might have to get on the phone and say, hey, I want to do this, and they can walk you through the steps. Some brokerages, I don't know which, some have a little button where you can say convert, and it'll do the backdoor process for you. What do you think about DraftKings? I like it, I own it. Thoughts on the election correlation to the markets? There's a whole bunch of theories. There's like a stock market, presidential election stock market theory that says that if the markets are up during the election year, whoever's in the White House will win. That would mean Biden. Masterclass hit my IG. I don't know what that is. What is the percentage you should have before you sell? That's up to you. I don't know. Is Pfizer a long-term hold? I would assume yes. Thoughts on Walmart? We've already talked about Walmart. I'm going to download this live and post it on YouTube later, and you can go back and rewatch it. What was the Brazilian bank you were talking about with Warren Buffett? It's NU. It's called NU, but it's NU is their ticker symbol. If you had $3,000, how would you invest it? Check on my playlist on investing by amounts. What do you think about DraftKings? I like it, I own it. What do you think on Plug Power and Lucid? Lottery tickets, I wouldn't put in more than I'm willing to lose. Can you analyze CCL? I have checked my investing for beginners, or should you invest in, or stock fights. It's in one of the playlists. We can help people not pay taxes. Okay. Bet on yourself. Is the Walmart dividend going to decrease? It will readjust to remain the same percentage amount. Gucci, NVDA short-term and earnings. Their earnings are out on Wednesday, so I'd be all eyes on that. I don't know if I would personally buy it ahead of earnings, but that's your call. Just Me says, I've seen a ton of Lucid's SUVs popping up. I haven't seen any Lucid SUVs, but I have seen a couple more Lucids recently. Super Friendly says, do you have any idea about HX? No, I have no idea about that one. I'm sorry. Hummer 97 forever. Thanks for the ETF tip on biotech. You're welcome. And it works with anything, by the way. It's not just biotech. What about crypto? I like it. I have some, but, I'm not the crypto guy. I'm a stock guy. How to get your free do your own research guide. You got to go on my website. It's my name. It's kennethsuna.com. Go on kennethsuna.com. Click on the menu. It's either down here on your phone or up here on your computer. A screen will pop up, and it has my free resource guide and lots of other great things. NVIDIA earnings on Wednesday. Yes. Okay, I'm all caught up. I'm going to go to the bottom. We're done here, basically. This is an hour-long live. Do you think we'll see a bounce in the market on Tuesday? Your guess is as good as mine. There's a lot of big earnings this week, though. What happens if I short a stock and then it were to split? It'll readjust on its own. The brokerage will readjust it for you. It could take some days, though. What do you think of dollar cost averaging small amounts into Bitcoin over several years? A small amount into anything is better than nothing, but it's a small amount over many years. You could start now buying it at 50,000, and before you know it, it's 100,000 or whatever, or it could be 10,000. Nobody knows. Maybe if you have such a limited amount, an ETF might be a better option for you, where you can just buy shares in something that owns it for you. Why is Costco not your favorite long-term investment? Because I never bought it. These are mine. These are investments I bought. Are you on every Sunday? Yes, every Sunday, Tuesday, and Thursday at 10 a.m. Eastern Time. CAVA price target end of year. Don't know. Let's see. Their price target is $52, and it's currently $54, so they smashed it. Their next highest is $62. Buzzed says, where can you see things like A+ for profitability? That is on Seeking Alpha's website. You might need a premium account. If you want a premium account, there's a link in my bio with a $50 off coupon, because we worked together a long time ago and I just kept it in there. Target, PayPal, Disney, should I keep them? I'm currently down 30%. I can't answer that question for you. If you bought them, there must have been a reason that you were bullish on them and you thought they would go up. You could continue to dollar cost average. These are largely seen as like relatively high quality companies. You could dollar cost average into them to lower your cost basis, or you could cut your losses at 30% and move on. That's your call. What percentage of your investments are in bonds? Zero. I'm not old. Bonds are for old people. What do you think of dollar cost averaging small amounts into Bitcoin? I answered that one already. Thoughts on Virgin Galactic? I wouldn't touch it. Thoughts on Twilio? I think they're down actually over a period of time. Let me look. Yeah, they're down 22%. I don't know much about Twilio. What about oil stocks? No, I don't invest in oil stocks there. Bad for the planet. What do you think of dollar cost averaging? I answered that question. NVIDIA, long or short? Okay, I answered that one. Will Neo come back? Couldn't tell you. How do you feel about investing in Bitcoin? I personally own Bitcoin, and I like it. Best way to invest $1,000. Dividends. Check my investing for beginners playlist. Check on my investing by amount playlist as well. What do you think of dollar cost averaging? God, you asked the same question like 80 times. Great info. What's your TP for CAVA? Oh, well, we just read it. Any thoughts on the dip Roku this week? No. Roku has never been a stock that was of interest to me because I felt like the space is dominated basically by like the big ones like Amazon, Netflix, and whatever. It's down 23%, so I'm kind of glad I never bought it. Is DKing DraftKings? Yes. What's the best way for me to learn how to analyze stocks and bonds? Software or a specific book? There are some books. You can click on the link in my bio. It'll take you to an Amazon storefront, which has a couple books on investing that I've read and I like. Or you can go to a website like Investopedia.com. Investopedia, chef's kiss. It has everything you need. Also, self-plugging my own website. It's my name. It's KennethSuna.com. You can click on the menu, and there's a free resource guide that has all the links that I use, and it's totally free. I hate when content creators say it's free, and then you go on their website, and then it's like, sign up for the email, and I'll send it to you. No, I'm not falling for that shit. Now you have my email, and you can bombard me with sales you're running for your course or your paid ebook, or your free guide is a stripped down version, and there's a much better version, but it's $20. I'm not like the other people on these apps. It is totally free. I'm just going to scroll down, man. 80 comments. The site name, it's my website. It's KennethSuna.com. It's just my first name and my last name. Are we expected to go into 401k to invest stocks, or our broker just does that for us? If you have a 401k through your employer, generally they'll give you a list of options. Like they'll sit down with you and they'll say, you have low risk, medium risk, high risk. If you're young, pick high risk. It's going to be mostly stocks. That's what you want. I had a friend once who went right out of college. They said, here are your options. She picked safest. It was bonds. She missed out on a decade and a half of massive growth in the markets. And one day they were all sitting down looking at their portfolios with her and her other colleagues. I'm up 80,000. I'm up 100,000. I'm up all this money. And she was like, how come my account is basically just what I put in? And they were like, no, there's got to be a mistake. And they looked and they were like, oh, you're in bonds. And she was like, I picked the safest. And they were like, nah, should have picked the highest risk. It'll adjust. You can adjust it. Let's see here. But if it's a Roth IRA or a brokerage account, you can pick your own. AT&T is down, but what about solely for dividends? You can, but I mean, you think about it. If you look back at AT&T, if you bought it solely for the dividend 10 years ago, you'd still be down 31% of your money would be gone. If you bought it 5 years ago, 26% of your money would be gone. If you bought it 1 year ago, 11% of your money would be gone. It seems like it's leveling out. Maybe it just trades sideways, but it's a high dividend isn't great if your investment is losing money. Do you plan on purchasing bonds as you near retirement? Yes. As I get closer to retirement, I'm going to look at my portfolio. I'll trim back some of the growth because I have a lot of growth stocks in my portfolio, a lot of growth and a lot of speculative investments. And as those speculative investments like CAVA and Rivian become growth companies that have massive growth, hopefully, then I'll trim back on them and put them into bonds or CDs or whatever. What's a good ETF? Check my playlist. Someone in the comments says, I just bought Virgin Galactic. I mean, the thing about a Virgin Galactic is you just got to think of it like a lottery ticket. I would look at a stock like Virgin Galactic and say, I'm willing to lose, let's see, it's $1.85. 100 shares is $185. I would take a risk. I would risk losing $185. But that's all I'd put in because I'm pretty sure I'm going to lose. Do you trim your meta or let it ride? I trimmed some. I mentioned it earlier on in the live. I trimmed some. Hey, ambitious. I trimmed some to buy my home, but I wouldn't have done that if I didn't absolutely have to. I would have just held all my shares forever. But I did have to trim some. Is Microsoft a buy? Renting versus buying. Microsoft, let's see. Microsoft has a 1-year price target, and then I'm going to wrap it up. We're going to call it a day after this Microsoft one because it's overextending the live by a whole 15 minutes. Microsoft has a 1-year price target of 469. That's 16% to the upside. The highest price target is 600. It has 34 analysts covering it. 32 of them recommend you buy it. Can you talk about SoFi? I have videos of them in my playlist. All right, everybody, I'm going to wrap this live up. I don't mess with options. Don't join this community here. If you mean my community, I'm trying to turn it off and TikTok won't let me. I've emailed them 30 times, literally 30 times to say, can you turn off the subscriber-only lives? And they never do it. So don't do it. All right. Bye, everyone. Thanks for watching. If I didn't answer your question, you can come back Tuesday or Thursday at 10 a.m. or you can leave a comment on one of my videos. Thanks for watching and have a good day. Robin, I think she's downstairs. So, oh, perfect timing. Robin. Nope. See, she hates the camera. Robin. Nope. She's gone. That did not last very long. She turned long enough to say, get out of my face. All right. Bye, everybody. I will be back on Tuesday.